And we are live. Hi, everyone. Hello, guys who are watching to us on YouTube, LinkedIn, X, and Telegram. And hello to you, the Trading Parrot. How are you doing today?
I'm doing very well. Thanks for having me, Anna.
Thank you for sparing the time for this webinar. We are always so happy to have you as our guest. And while we are waiting for everyone to join, guys, please let us know where you're joining us from, the country, and for how long have you been using three commas. And if you have any questions for our webinar, because today we're going to cover all of the main basics on creating your own strategy and testing it. So whatever concerns, questions you ever had, please feel free to also let us know your questions so we can answer them and give you as a comprehensive answer as possible. Okay, I can see that people are joining us on YouTube. Tom Bots, I'm all ears. TTP is the reason why I took a 3 comma subscription in 2021. Wow, that's good to hear.
It's true. I know Tom very well.
Oh, okay. So you like know him personally?
He joined my community years ago, and initially we were doing bots together, and he's been in my community as well for many years, and learning from each other and stuff. That's
Yeah,
why I was smiling when I saw the name.
yeah, peer-to-peer education is always good. Okay, we see people join us from Singapore. Great. That's a lovely place to be joining us from. Yeah, guys, just while we're waiting for everyone to join, just let us know where you're joining us from and for how long have you been using 3 commas. And if you have any questions that you would like to get answers to during this webinar, please make sure you write them down. We will have a special dedicated time at the end of the webinar where we answer all of the questions, but we still try to, keep the webinar concise and no longer than 30 minutes. Okay, hello from South Africa. Signed up 3 commas this month. Oh, hi, Naidol. Welcome. Good to see new people who just discovered 3 commas. Ireland. Pleasure meeting you guys. My name is Chris. I'm German, but living in Brazil.
Oh,
Nice.
wow. Nice.
Yeah. Switzerland. Hola from Spain. Nice. We have a very international audience today. Yeah, guys, just a couple of more minutes and we will begin. From Germany. Hallo. Herzlich willkommen. Yeah. So while you guys joining, just I want to remind you the topic of our video for today. We're going to talk about how to come up with your strategy, how to build it, what to take into account, and then, of course, how to test your strategy to make sure that it's successful and profitable. And then we're also going to talk a little bit about automating strategies with 3 commas, because that's what 3 commas is all about. It's about automating your strategy and getting rid of the emotional factor from your trading. Okay, Amsterdam, the Netherlands, Ireland again, Dubai. Okay, awesome. Awesome, guys. Okay, I see people are joining on X and YouTube, and I think we can slowly start with our webinar. But before we do that, the Trading Parrot, could you please introduce yourself a little bit so people who might not know you, which is
Yeah.
probably a rare case, but they can get a little bit familiar with your background?
Yeah, absolutely. Well, I'm a former software engineer, so many people I noticed that are interested in trading bots have an interest in engineering, in tech, and I used to work for banking and building software, then being a head of engineering, and from then in 2020, when there was the COVID crash, I happened to be experimenting with automating strategies using MetaTrader and different platforms. And that's when I discovered 3 commas. It was kind of mid 2020 that we were all confined during the lockdowns, and we had tons of time. And I started researching, and I found this platform 3 commas, and I found that it will simplify a lot of things that before I was doing by having to code every single bit. So I was immediately jumping in three commas, and in a very short time, I put up a YouTube channel because I wanted to share where I was experimenting with more people and see if I can find like-minded people. And I was blown away because my channel grew exponential, and eventually it became kind of the synonym with trading bots and strategies, and trying to find what work. Of course, that was 2021, into the first peak of Bitcoin when we went to 65, and it was one of the best rallies that you can ever expect, right? So all coins, everything was performing really well. I'm saying this because it was really easy to be very good at everything during those days, which definitely I have to be thankful for that, because that helped my channel to grow while I was still kind of a beginner, if you want, because that was 4 years ago, if you think about it.
Yeah, wow. Thank you so much for telling us a little bit about your background. And I see that people are saying that yesterday you had your birthday.
Oh yeah.
Oh, a happy belated birthday.
Thank you, thank you.
Yeah. Well, and I'm super thankful that right after you're celebrating your birthday, you're joining us today. So yeah, you have people who are very well aware of what's going on.
Yeah.
Thank you very much. I think that's a very like common thing when during COVID, people started doing something new, exploring something else, and your story of growing your YouTube channel and
Hmm.
creating this community. I think that's a very inspiring, and I think that's what people should do when they're very interested into a specific topic. Just to surround themselves with like-minded people, and that's what we're
Hmm.
also doing here. So, without further ado, let's get started with the first part of our webinar. It's all about the foundations of building your own strategy. Could you please navigate us? What steps do you take? What do you need to take into account in order to build your own strategy?
Yeah, sure. So I'm gonna keep it very simple here. This is gonna be a bit conversational. I'm gonna run you through the things I usually put on the table before I get started.
Mhm.
Um, and this is not just about my own preference, but because I had a large community of people interested in trading bots. One of the things I learned is how different is each individual as a bot trader, not just as a manual trader. There are people that are willing to risk a lot, and some other people that are way more conservative and they want to take it slow. And initially, my assumption is to put everybody in the same in the same bucket, but actually, everybody's very different. So I think self-awareness is kind of the first step, which is to understand what are you really looking for, what good looks like to you, how does it sound good, what speed, how much of risk appetite you have, um, and then how complicated you want to go as well with trading bots, because you could do something extremely simple and still effective, or maybe your appetite for complexity, for tech, for integrating multiple crazy things, is what drives you, which is fair enough. Some people want to integrate AI with Signal, with coding, with doing so many crazy things that you can do nowadays. So I guess those are the first two pillars before getting started. And then you need to think about the pace and the style of trading bot that you want to run, whether you want to go for something long term. I know very successful people that literally just trade moving averages, crossing, and in a monthly basis. And they enter one day and they let the bot with a single deal run for 3 months, not doing anything. And they're capable of waiting all that time until the deal closes in the next bear cross. And that's it. You can keep it as simple as that. Uh, 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 and you need to be able to stay with the hands not itching to close the deal when it's in profit or when it goes slightly in drawdown.
That's my
that
problem. I'm always like very emotional, and I just it slightly goes down. I'm just like, oh, do I need to buy? Or do I need to sell?
yeah,
Oh,
yeah,
this is
and it's
annoying.
it's it's something that you need to do for self-awareness, and for that I recommend on three commas trying the paper trading, um, because it gives you that feeling of that you are doing something, but without necessarily before you get to know yourself, before you close that deal that's slightly entering in a drawdown of 5% or 10%, you just close it, then you take the loss, you realize it, and then suddenly the market starts coming back up. Um, so getting to know that you will react that way and being prepared emotionally is very important. And also knowing, well, this doesn't really work for me. That can be an answer. Maybe long term is too slow, too boring, and I get so bored that I end up making a huge mess. Some
Yeah.
other people run from that and then they go into scalping or swing, which is slightly faster. So you have the long term, which has an advantage of being low maintenance. It's like a trend following with moving averages, or for example, during a bull market, buying your assets with an RSI below 30 on the daily time frame or even on the weekly time frame, assuming that you think that we are still in a bull market. Those are great opportunities, but do require you to be very strict, um, and follow, set alerts and things like this, and have a plan written before it happens, because that's the next problem. People set these strategies, and when they get the alert, they say, yeah, I just got the alert that Bitcoin is, the RSI is at 25, but maybe it's going to go to 20. And if it goes to 20, maybe I can buy it cheaper. And then they don't do it. And that's where the bot is kind of having the plan and settling the plan, on not just on a piece of paper, but on rock stone, and then you have to follow it. So that's another advantage of the bots, that you can really put a lot of thinking prior to the events and think, well, if we look at the past performance of Bitcoin in the previous bull run, this happened very rarely, and it usually led to upside with a 95% chances. Wow, there you go. You have an alpha. Therefore, you have put enough thinking, then now materialize it with an automated strategy. Or if you send the alerts to you, you have to be as strict, as the bot. But the bot will do it without feelings. That's the advantage. So if you want to look the other way and leave your bot doing what you put so much love and time in thinking, I think that works. But test it on paper trading, because I know so many people that they put the bot, as soon as the bot is running, they install the three commas app in their phone, with a strategy that's supposed to do one or two things every 2-3 months. And then they keep checking the phone, and then they still end up clicking on market order, because I'm bored, or because I'm drunk, or whatever, anything can happen, really. So that is, getting to know yourself is very important. Then you have the risk profile. So people, are willing to risk different amounts. And if you set a bot, for example, and your bot is minus $100, how do you feel? You need to know how you're going to feel, because once it's minus $100, you need to have a plan. What's going to be my reaction to that? Am I going to let it go into 300, into 500, or am I just going to cut it? uh, Getting to know your risk profile is really going to save you a lot of money. Uh, so if you feel too much pain and you're starting to sweat cold with your bots, you're probably trading with too much. Okay, you need to get it small numbers and stuff like that.
Yeah. I think
Um,
it's all about, also like understanding yourself and your emotions and your risk profile. And, it's more like inner work with yourself as well, not just only about the strategies.
Yep, yep. I mean, I, I remember back in the day in 2020, I was doing really great. I cannot hide that. I was with a smile every day because I couldn't believe how good things were performing. And every now and then I did something crazy. Of course, I didn't say it in the video, but I traded with $1 million and stuff like that. And it was just crazy to see. I don't know if many of you guys have had the chance ever to have $1 million position on an exchange and watch it with your own eyes and knowing that that is your pocket moving. It's just crazy.
Wow.
It's just crazy. But well, many people do it with a lot more than that, right? But it's something that once you test it, you see you feel like that green candle is your heart that is about to explode, or when it's red, even worse. Anyways, but that is very important to know how you're going to feel. Don't assume that, yeah, we'll be absolutely fine, and then it's very stressing. For example, just to tell you something, I don't feel that much stress when I see a red bag, but I do feel a lot of stress when I see a huge green bag. I'm kind of upside down.
Mhm.
So if I see a trade that is well in profit, I get stressed that the market will reverse and I didn't take the profits. I kind of learned the bad way during the bear market to be very protective with my profits. And I guess people that have been for many cycles, they know what I'm talking about. But if you're new, you will learn that lesson eventually, that you need to take profits. So greenbacks, unrealized profits are not profits. Profits are realized. So make sure that when you are well in the green, that you have an exit plan is extremely important. You got market conditions, type of strategies. So as I mentioned, you have the trend following, which require you to find a breakout, an entry, a breakout entry. In my channel, I use a lot the breakouts on the RSI when I put a trend line and I say, hey, the momentum just pinch that trend line. We got a potential breakout. And then once you catch that breakout, if it's an actual breakout, not a fake out, you can ride that new trend, that reversal. There's that type of strategy, and there's also sideways, which is also extremely profitable. It's two completely separate ways of trading, and looking for your signals are completely different, and how long you hold is different. In the sideways, you're looking to find a range. It could be a channel to the downside, to the upside, just sideways. It could be a channel that is in the price, or it could be a channel that is in the RSI, in the momentum, in the MACD. Once you identify that element, the price or the RSI is moving within certain constraints, you enter at support and you sell at resistance. You assume that you're going to stay for longer in that range. Price most of the time is in a range. That's something that we need to know. Most people are looking for that uptrend or for that downtrend, but it's really a lot more difficult to find those, because Bitcoin goes to, let's say, it pump to 100 and it's been in a range, and we're still in a range. We were about to lose 80, but we're coming back to 81 and we remain in that range, and people are trading those ranges. And you can identify them once you admit, okay, we are ranging. When you do that and we are ranging, you adapt your strategy. You say, there was a big move in the price. I'm going to look for a trading range. Maybe I switch on a grid bot from here, or maybe I identify a potential incoming channel and I'm going to look for those areas of support and resistance. Um, Nowadays, I do that manually, and I use smart trades when I connect to exchanges on 3 commas. Let me share the screen just to give you an idea. Mm, yeah, this one. So at the moment, I'm in Create DCA bot, but uh, something that I don't hear enough people talking about is the smart trade, and because it's got tons of different features to enter to take profit. Uh, and I really like that I always get the same UI. It's been improved, of course, over the years, but I'm so used to this UI that I don't even have to think, to take the profit, set the take profits, the stop loss, and everything, and then to track the position, to add funds, to reduce my position, and all of that. I'm very used to that. Like you set just the size, the leverage, and whether you want to use limit or market order, and then you have trailing and all those things. W- of course, I can do it in the exchange, but one of the advantage for me of doing it from here is that, well, it's normalized, so I don't have to be thinking, oh, now I'm in bluffing, no, I'm in OKX, now I'm on whatever. I just use a single tool, and when, and believe me, when you are stressed because you need to enter your position or you identify a unique opportunity, if you have to be dealing with an exchange that you're not necessarily fully familiar, it is a bonus to have always the same UI. You just connect this change to this, and then you go. So that is an advantage, I think. Uh, l- Let us know, guys. Am I going in the right direction with the topics? You want me to cover something specific? Just write it in the comments. Um, just don't want to go into a topic too deep, and then the people get bored. Uh,
No, I think it's okay. If we receive some questions, we will definitely answer them. But I think we can just go with all of the basics and then just see how the conversation goes.
yeah, yeah. So one thing I wanted to show you is about tools. These tools are tools that are not part of Tricomas, but Tricomas makes it very easy throughout these years for me to connect the tools with Tricomas to make it easier. And I'm going to share the screen again. So you should be able to see my trading view. Is that correct? Okay. And so there are two tools that, in terms of backtesting, have become my favorite ones to go. And I know that 3 is progressing quickly towards getting their own backtesting system. But I tried, and they're still improving some features in the backtesting. So for me, it's still all about using ADB and Absolute No. These are my two uh, tools that I built in doing collaborations with other people as well. Absolutno is fully my baby. ADB is something that I did with Aster back in the day, at least 2 years ago. And this ADB simulates everything that 3 can do. And I think 3 already has a backtester as well, and it's fully free. And on this one, what I do is I simulate a DCA bot, and I simulate entries and exits, and then I can backtest directly in here. And then Absolutno is completely different. It doesn't intend to mimic 3. It's using TA to enter each of the safety orders, to exit. Uh, it's kind of something I built, and then I influenced 3 to also have the same. You're probably familiar now in 3 when you go to a DCA bot. Uh, if you scroll down now, there are trace start conditions, and there's averaging order and averaging order conditions. Um, I mean, my humble opinion, we started with this in 2021 with Absolutno, and I push product owners in 3 Can we get it in 3 And now we have it. So we can do similar things in here. But the way I use it, to be fully honest, is I still use Absolutno, and I set up all my conditions with other indicators that give me signals, and I use them for base order, for safety order, for both, or for the last safety order. And then I connect all the external signals, and I see the strategy tester and I look at the performance, if I like the drawdown, if I like how it behaves through a long period of time after using deep backtesting and all of that, then I connect it with a DCA bot. And the Absolutno has been built specifically to work very well with three commas. So you just literally place here at the bottom, you select the bot ID. This is all three commas settings. So bot ID, if you want to do hedging with a bot, one running longs, one running shorts, and have two separate assets, you really can do that as well. You can do crazy things. And then you connect it, and then you can even see on the screen the webhook, the payload that will get sent to three commas, and then you can paper trade it and all of that. So for me, through the years, this has been the way to go. Um, and that has been the main driver of my community. Most of the people that are still in the community, even if I'm not putting out many videos about bots, there's loads of people that are still around and using these tools. Um, One question I get a lot is, are you still using it yourself? Um, and the answer to that is no. I use it up until a couple of months ago, but in order to run these bots, you need to do all that research, right? So you need, I will say, if I wanted to run one of these bots, I will probably spend 2 days just full focus on doing all the back testing, checking different coins, and all of that. And that takes time. It's kind of, bots are like, you have to invest your time in studying the bot, and the more you study the bot and the more you do uh, paper trading, forward testing and all of that, the more you get to know your bot. And once you have spent all that time with different assets, different coins, different time frames and all of that, you kind of reduce your future pain. Your future pain is if you did this research wrong and you missed some extremes that you kind of overlooked, then they come back and hunt you because you took the wrong strategy and you were not expecting such a huge drawdown. Um, of course, you cannot prevent everything in crypto. Like, and remember the crash of Luna, Terra? Um, there is not a single bot that can prevent the pain from that. That coin went to zero in 1 day. And but in normal conditions, even in a bear market, it's good to backtest these beasts against a lot of things. And if you do that, you can enjoy a year, 2 years of running a bot like this and not touching ever, ever. It's kind of the dream of every bot trader, right? To just create your bot, leave it there, passive income. And I've done this with different coins. You have to also focus on testing coins that you kind of trust a bit more than others. I think one really great takeaway is, do not trade wildly all coins at the same time, because these bots, they make small profits, they scalp and everything, and it only takes one really to go really bad to spoil the rest. So be picky, be picky with the coins that you picked, uh, and all of that. Um, Yep, I'm gonna read the questions. Should we read the questions, Anna? And in case there's,
Yes, let's move to this part with the questions, guys. This is the perfect time when you can ask whatever questions you have to the Trading Parrot. I can see that we already have quite a few of them. But before we dive into the specific webinar questions, there is a question from Chris Gon that I would personally like to answer. He's asking, are you going to make a special offer for Easter? And the answer is yes, guys. Please keep an eye on our announcements on social media. We start the Easter campaign on 14th of April, and in order to not miss it, scan the QR code that you see on the screen right now, join our community to make sure that you are staying aligned with us. That was it from my side. So now let's move to the topic related questions. Okay, let me just see.
Oh, there's one that I like. What kind of indicator are you using? And the name is, I think, is in Russian, so you're gonna have to pronounce it, Anna.
Vася Pupkin. Yeah.
That's the Pupkin. Indicators. So indicators, there's a tendency from people to think that there is a magic indicator, and I'm gonna share the screen again, and I want to push back on that. I think indicators just play a role. Okay, let me give you an example. If you're cooking, think about something that you need to cook. Um, do you think you can cook better food with certain knife or certain specific fork? No, they are just tools, right? You need to cook, let's say you need to cook a steak. Do you think your steak is going to taste better because you have a certain knife? No. In indicators, it's kind of the same thing. If I'm going to cook my steak here and my steak is, a strategy that makes profit, of course, having a nicer, shinier kind of knife is going to impress everybody. But indeed, how I use that knife, how I use, in this case, the RSI, can make a huge difference, even if it's just a stupid, damp RSI. And it's kind of comes down to, simpler sometimes is more powerful. Like, I convince people to use RSI when there's a huge amount of people saying, well, RSI is too stupid. How can you use RSI? Use something more advanced. But I insist, you can really create an amazing sculpture and just by hitting it with a damp hammer. And that's what we are going to do in here. Like, for example, here I have an RSI that has a length of 7 and is crossing up 70 on the 1 hour. And you might think, "But yeah, but that's so obvious. That's so typical. How can you profit from that?" Well, I'm combining it with an higher time frame thing. So is it about the RSI? Is there something special about the RSI? Not necessarily. It's the way we are mixing things. We are pairing something that is a higher time frame with something that is on the 4 hour with something on the 1 hour. And then if you go to the 15 minutes, if you have enough data to test, because you need a subscription on TradingView to see enough time back, enough time window. If you have that, well, good for you, because that combination of three things, three different time frames, is really powerful. And they're like rules of things that work well when they're well combined. It's same as cooking, I was thinking. Like in cooking, you combine something that has fat, acidity, and is juicy, and it looks good. There are different elements that allow you. Why am I talking so much about food today? Anyways, let's go back to trading.
It's always good to talk about food and make food comparisons.
Maybe it's because it's lunchtime, but anyways, in here, for example, I have QFL, and QFL is set to the 1 hour, and I'm combining it with the RSI in the 1 hour, and they work really well on Bitcoin. I've noticed that in the past. I know it by heart. But if I go to Solana, it won't work really well, because Solana is just too crazy of a horse. And if you know your assets and you know which assets do certain misbehaviors, like they are like having tantrums every now and then, like children, then you know that you need to grab your QFL and drop it to 4 hour. On 3 commas, when you do QFL, you got, I'm not sure if it's in this exchange available. It's not available here, but maybe on Bybit. QFL is not on Bybit. I think on Binance then. QFL. There you go. So you got the original, the day trading, the conservative trader, and the position trader, and this is really powerful tool. QFL is based on bases, these bases that you can see here in the chart. So every time that you get kind of a pivot in the price, you create a new base, and the signal is when the price comes to that uh, base and it pinches that, and depending on how below you go, in this case 3%, then you get the signal, and that is a buy signal. And if you go, let's go into an area where we get a signal, and let's see the confluence of the two indicators. So you can see that the base is around 96,800 right here, and price pinched that, and it pinched that um, way lower, and then it came back up, and thanks to the RSI, it gave a signal. And then the price carry on lower, and eventually the price came back to the same base. So QFL stands for what was the name? Look, quick fingers look. Yeah, quick fingers look is called. And Luke had a channel in YouTube explaining that when this happens, the price comes back to the same level. And the theory, well, you could explain it with fair value gaps, with liquidation pools, and all the stuff. There's a speculation that somewhere in here there's a liquidity pool, and you come back and you visit. It's just a theory. Maybe there's no liquidity pool here, but QFL thought most of the time there is, and then price comes back and tests that. So the idea of the strategy is that you put orders like this in a ladder, and eventually when you come back, you take profits. And that combined with the RSI, which is telling me that there is a reversal to the upside, then it works really well. Do not look at the profits, because I haven't set this strategy to impress anybody. I just put randomly the things so you can visually see what's going on, but I haven't done any fine tuning or anything. Just showing you how it will look. Like you enter with one order in here, then another one there, and another one here. Notice that each order broke a different base, and that is really important, really cool. The first base got broken in here, and we were supposed to go back to the base, but we didn't. And then there was another base which also broke, and we didn't go. And then a third one, and that's my last safety order. And after we broke three bases, we came back to the first one at 94. Look how precise. It went right there. So quick fingers look was right about this one. And what makes it special is that we are using a full signal to enter in here, another full signal here, and another full signal there. What do I mean by a full signal? That each of these instances is the combination of both things happening at the same time. My conditions for RSI, my conditions for QFL. And that gives me much more chances that as I'm adding and scaling up my position with a larger volume, that I have better chances to then exit up. With these settings on Bitcoin, Bitcoin moves less than the rest. If you do this to a crazy coin, let's say Solana, I'm pretty sure that we are trapped with this. Well, we are not. So it survived. Wow, incredible. With Cardano, oh, it's doing well. Wow. Well, I guess my take profits is very small. Uh, Maybe I'm cheating in here, just just to impress everybody. Max safety order, price deviation. Where is my take profit? Target take profit 0.9. Okay, so with a 0.9 is very small of a target. So that's why it's surviving really well. Some people will increase this and go to crazy, maybe a 3%. Might be too much for Cardano, since Cardano has had some bad periods. Well, it's still surviving. It's still in profit. And we got a 30% profit in here. And actually, my ADB, which mimics 3 commas, it's also doing okay, but it's set to take profits very little as well. I'm gonna go into more questions, Anna.
Yes, we do have a couple of questions here.
Yeah.
So let me just scroll down a bit. There was a question regarding connected to RCI. What is the good combination of timeframes of RCI to set up a 3 commas bot buying the dip?
Um, of course, this depends on the asset. Okay, so there's not a single recipe for everything. Something that might work well with a few assets, it might not with other assets, and also think that assets change. So you should not create a strategy that squeezes the most profits from, when you're doing the back testing. It's very tempting to say, okay, let's take a challenge. Okay, let's get this strategy to get to the maximum profits that I can get, and that is going to 100% lead you into overfitting your strategy. Basically, you are capable of taking the best profits in a period that is already the past. Anything changes 1% in the future and you're dead. You do not do that. That's overfitting and is the top one trap for bot traders. So, how do you prevent overfitting? Well, rule of thumb is relax your strategy. Don't be so greedy. Okay. So, relax that greediness. Is your strategy giving you um, more than 0.3% a day? Most likely you're overfitting. Um, for sure. I'm talking about spot returns. Okay, of course, if you put 50x, you're gonna get a lot more. But let's say 1x. If you're getting 0.3, um, 0.1 is good. and I like saying these things because the aggressive traders, the one that haven't been wrecked yet, they say, "Oh, I get 10% a day." Yeah, sure. Let's talk in 1 month and let's see how you're doing. Be careful, don't overfit, don't be so greedy, be, proud of the longevity of your strategy. Don't be proud of the day to day that you're doing just for a span of 3 days before you get wrecked, because that's not gonna really be a great badge to wear on your chest. Oh, I did 10% a day for 10 days and then I lost everything. What's the point? Right? So relax your strategy, aim for smaller profits, and get your strategy into a state that you think, well, this is gonna survive a lot. There's a balance though, right? You don't wanna get too little profits and be exposed to the market for a very long period of time either. There is a balance. You need to find that balance. For example, if you tell me in 6 months my bot made 2%, and it's been doing scalpings of that every day give me 0.00 something. The risk on those strategies is that if you are exposed to the market for a very long period of time and there is a black swan event in 6 months or in 1 year or in 2 years, there can be a black swan, right? And if there is a black swan and it gets your strategy to lose 20 times what you made during that period, because in that period you just make 2%, the question is, can the strategy recover from that at that speed? No way. So you need to elevate a bit the profits in such a way that then in the long term, if something affects your bot, it can recover. It's difficult, particularly with DCA. DCA is I'm starting to forget the concepts. Is I think it's called negatively skew, and correct me in the comments if I got this the opposite. But negatively skewed strategies. I read some books about this. I'm not bullshitting here. Just by the way, I can show you the books another day. And a negatively skewed strategy. You have a strategy that most of the time makes small profits, yeah, very small profits, and then one day it hits hard. they compare it with an insurance, like in an insurance company that charges you every month $5 in case you get sick. And then one day you get sick and you get paid, or they have to pay you $5,000 because you got sick. So they get every day $5, $5, $5, $5, $5, and one day they need to pay 5,000. That is that type of strategy. So you need to find a balance. So if you are the insurer, you still end up breaking even in the worst case scenario. That's kind of the takeaway. Um, yes. Let's go to another question.
Yes, I think we have some time for a couple of more questions, but not
Mhm.
more than more. So there is a question from Christian Mella. He asks, "Is it possible to create a strategy where the conditions are in different time frames?"
Yeah, great question. Uh, so 3 commas makes that really easy. So it's very easy to set it up. Let's clarify that. It's very easy to set up here something that has multiple time frames because you can add conditions to your bot, and each of the conditions can be in different time frames: 4 hour, 1 hour, and 15 minutes. There you go. That's your multi-time frame entry for averaging orders down. And you can do the same for entering, and you can do the same for exiting. When you do these kind of things on TradingView, it's a lot trickier because there's something called repainting, and that uh, element is something that affects strategies, particularly the ones that use multiple timeframes at the same time. And it happens because, um, let's say here I'm in the 1 hour, and let's say I incorporate an indicator that is on the daily here. Let's just put another RSI, and let's put it in on the daily, just so I can explain my point. So let's remove that. Can you see my screen? Yeah. So
Yes.
here is the 1 hour RSI, and here is the daily. And as you can see on the daily, for the whole day, you keep the same value when you look back in time. So from midnight to the next day, that RSI says that. Why? Because if we go to the daily, we're going to see that the value was 48. In the 1 hour, there should be like a 48 or something here that remain the same. Every candle of 1 hour was the same value. But when you're looking at the day RSI, that we are still within the day, that RSI is changing with every move of the price. Even if it's the daily RSI here at the low end of my chart, as you see the price moving down or up, that RSI daily is going to also move. And the problem is that the strategy might be looking at the current value of the daily that is still moving, it's still not settled. Therefore, it might enter into your buying area. You take a deal because combining the daily with the hour, you get all the conditions. Therefore, your strategy might get tempted to enter with the ongoing value, with the live value of the RSI daily. And then at the end of the day, let's say Cardano starts moving up and it exits from your entry area because the daily price went up. Then the next day, when you look at the past, it's going to show you that there was never a deal because you never went that low. It closed at these highs, the RSI daily. But during the day in the intracandle, it was there and you took a deal. But that deal is not in the backtest anymore. And that's repainting. That's one way of repainting. There's like 1,000 ways. I dealt with probably all of them. This repainting is painful because then when you want to compare that strategy of the bot in the backtest, it will show you something really beautiful. You will be really proud of your backtesting, but when you put it in practice to run, it will do the opposite. It will have tons of losses, or maybe it will be more profitable than on paper. Uh, so that is something complex, and on 3 commas you don't have to deal with that. But the caveat is that even if you don't have to deal with that in 3 commas, I still want to go here and backtest it in a way that I can trust it. So then later I can copy the values in here and feel like I'm doing in both sides the same thing, that I'm not being lied by the back testing. So repainting is a thing. 3 commas makes it easy, but pay attention to repainting for multi-time frame strategies.
Okay, I think we have time for one more question. And I want this one to be like a wrap-up question, a little bit more like general. So Chris Kai asks, how do you feel about the markets these days? Does it feel different to a couple of years ago?
Oh, where do I start? I think yes, definitely. It's been. It feels like in 2021 there was the COVID crash, and it was in the beginning of the early. It was the early bull market in 2020 when there was the crash, and that shift the whole bull rally one level down. But we still have that upside from there, from the bottom of 3 point something K. Uh, so it actually felt really good because the money printer was active and it was so easy to trade. Now we are kind of in the inverse situation. We had a decent rally from the bottom, from 15K into 100K. But now we are having a similar event with these tariffs and things, and the economy, geopolitical tensions, institutions being the only ones full of cash in the pockets, retail being squashed, inflation, and the list goes on and on. And that definitely has affected the amount of liquidity for trading alts. Bitcoin seems to be doing much better than I would have expected. If someone described what we are going through, I will have said Bitcoin should be at 50 by now, 50K with a 50% correction. Yeah, why not? That happened all the time before. And the fact that we are at 80 shows that, institutions are still kind of holding that there. But the rest of all coins is a disaster. So it's very different, very difficult. And if you trade with bots, you have to be a lot more conservative. It's not a territory for not trading with bots. You can trade bots anything. You just need to be aware of what you're trading. What's the adversary? In this case, the adversary is a tough one because there's less retail, there's less damn money, there's more institutions, there's less liquidity. But that might change potentially by the end of 2025. We might get another wave up.
Thank you so much, Mariano. Thank you for coming today, educating us on how to create our own strategies, how to test them. And thank you so much for covering the questions that our audience had. I
Yeah.
wish we could have more time to talk a little bit more about this, because we can see how active people are, how they really want to know your opinion on things. And I think that's a good sign to have you as our guest a lot more often now.
Yeah, that's awesome. And enjoy your lunch, guys. I
Well,
can see
maybe
some
somebody
people.
had lunch together with us. They were watching the webinar.
Yeah, sure. Thanks for having me, Anna. It was a pleasure.
Yeah, thank you so much. We really appreciate you doing this. And guys, to everybody who watched us today, thank you so much for participating in our webinar. Please make sure you join our communities, subscribe to us. In all of the different social media, and you can always leave us a question for the next webinar with the Trading Parrot, so we make sure to cover it. Okay, thank you, everyone. Thank you, Mariana. I wish
Cheers.
everybody a good day.
Thank you.
Yeah, bye bye.